Can you afford a financial advisor? When is the right time to hire one? A recent study from Charles Schwab found only 1 in 4 Americans has a financial plan. The top roadblock to planning, most people think that they don't have enough money to need a formal plan. So who needs a financial plan?
Yeah, so everybody needs a financial plan if you're going to retire. Call it a retirement plan or call it a financial plan. In your 20s, 30s, and 40s, you're trying to amass your wealth. It's simple index investing, if you would, S&P 500, NASDAQ. But when you look at your statement and you say, this is a material amount of money to me, doesn't matter whether that is $100,000 or $10 million. If you would lose 10 or 20% or 30% of it, would you say, oh, wow, this hurts? That's the time to start to consider working with a financial advisor to build out a more holistic plan for you. That plan needs to add 2 things. Obviously, everybody's focused on growth. We want to invest our money, we want it to go up, not down.
Right.
But when you get closer to retirement, and I would say you start targeting this around mid-50s in age, if you've got a target date for retirement and you're getting into your late 50s, you've got to add 2 things to your financial planning and investment strategy. One is you got to start looking at how much do my investments have the ability to send me an income, and what are the taxes on that distribution? And the second thing you need to add is some level of understanding what protection is included in my portfolio. And that's standard deviation. It's a measure of financial risk. So you have growth targets, income plan with taxes, and you need a protection strategy. And that's the way you glide yourself into a comfortable and less stressful retirement.
Okay, one more number from that poll. 20% said they don't know how to get started. So if you can break it down for us, what steps should I take and what is expected when I make that first phone call?
Yeah, so that's the key. The biggest hesitation, and even with our show and my radio show, people will call and say, I've been watching you for years, Chris, and now I'm finally ready. So there is a timing, and you have to be comfortable that you're ready for it. But we will break it down into very bite-sized, edible steps for you. The first step is to call or go online and sign up for a portfolio x-ray.
Okay.
When you call, you can book an appointment. Somebody will call you back Monday or Tuesday. And the portfolio x-ray is a analysis of what you have today. It breaks down everything. It breaks down the fee structure. It breaks down your growth targets and achievements. It'll break down your risk profile and what would happen if we went through another Great Recession or COVID crisis. How much damage would your portfolio go through? That gives us the foundation of whether we need to make changes or you're in good shape, and we can then begin the planning process. So that's the first step. It's very easy. From there, we can go into developing an income plan for you with tax strategies, and then we wrap it all in a nice bow in a full financial plan from today's age through age 100.
Right. And there might be some people who are at home saying, you know, maybe I'm okay, and they just want a second opinion. Maybe they come into you and they get the portfolio x-ray, and they find out maybe they are on track. That must be empowering for them.
Yeah, it's rare that we're not able to show them 2 or 3 what I call golden nuggets of things that they didn't realize were happening in the portfolio that are either stalling their growth or exposing them to too much risk. Now, that doesn't mean if we find 2 or 3 golden nuggets in their portfolio mix that they need to hire us as their advisory team. We can actually make a recommendation on things like 401k optimization and repick from that list. So people shouldn't feel like meeting with a financial advisor, you're automatically saying, I'm going to hire you. That should not be the case. So I would encourage people to call, get the 401k x-ray from us, digest it, take your time, and then determine, do you want to continue with a income plan and a full retirement plan.
A lot of people also assumed it would be too expensive to work with an advisor. They probably don't realize whether it's worth it or not to them, right? So a financial plan, though, isn't necessarily just for the ultra rich.
No, so the fees that a financial advisor charges, 401ks, they hide them. And I believe they're not disclosed properly. So that's a big question mark that people have is, how much are they charging me in my 401k? But a financial advisory fee is a specific fixed percent. But that advisor should take it to another level and basically once a year, let's say at the beginning of the new year, should sit down with their client and say, here's how much you paid me last year. Has anybody out there who's watching today who has a financial advisor had their financial advisor say to them, hey, by the way, you paid me $15,000 last year, and then back it up with, here's how I benefited you exponentially more than $15,000. Here's how much in tax savings I provided to you. Here's how much I beat the benchmark of the market and made you. And here's how I protected you in a down market and you didn't lose anywhere near what the market lost last year. Mm-hmm. If they can't justify that, you don't need them as your advisor because they should get a fee based on exponential success in your portfolio and in your financial plan. And they should be able to have an open and honest conversation with you at least annually on that.
I call that accountability.
That's right.
Yeah. So I believe, you know that every client is unique. There is no cookie cutter answer as much as we would all wish there was one number we could all strive for. There isn't. But that's why you and your team are fiduciary investment advisors, not brokers. Can you explain the difference?
Yeah, so let me go back in time quickly. For years, all financial advisors and or brokers back in the day got a Series 7. That was a brokerage license that allowed you to charge commission. So what happened was brokers were calling their clients almost daily saying, sell this stock, buy this stock, and they would get paid on selling it and on buying it. So the way they made their income, they could dictate how much they made monthly or annually by the number of phone calls and transactions that they put their clients through. That's called churning. So the industry woke up and said, wait. How about instead of commissions, we do an advisory fee? So a common advisory fee would be they charge 1% on your assets per year. But now you run the risk of your financial advisor not calling you and not engaging in meetings because they're getting paid no matter what. So just understand if you're going to hire a fiduciary financial advisor, that's great. Fee-only advisor would be great. But you're going to have to make sure and ask them, how many meetings am I going to be offered per year? We offer our clients 4 meetings, once a quarter. They can take us up on that. They get notified. They can book it themselves. But if they're not willing to meet with you at least 2 or 3 times a year, they're collecting a fee and they may not be paying attention to your portfolio. So now, the fee-based advisors have a fiduciary designation, which means you need to act in the utmost best interest of your client. I think that's powerful as well.
Interesting. I'm glad we got to talk that through.